Well, thank you everybody for joining our NAILBA Symposium panel. We're very excited to have you today. We've got a great lineup and a wonderful topic around variable life insurance. The VUL sale from client conversation to issue, and also some of the dynamics that come into play, the parties involved in the sale, the process it goes through, and the broker dealers kind of behind the scenes on suitability of the sale. So I'd like to thank NAILBA for this opportunity. They're a wonderful organization. Obviously, you're tuning in because you know of the great resources that they have to offer. And so we'd like to thank them first and foremost. And I will introduce myself. My name is Charles Arnold. I'm the Chief Marketing Officer for the Leaders Group. We're an independent broker-dealer that helps insurance agents and brokerage general agencies out in the marketplace market, position, and sell, and also process variable life insurance. So we're really excited to be a part of this, and I'm going to be your host moderator, if you will. Joining us today, we have the various aspects of the sale, right? We have first and foremost, kind of the most important piece is the financial professional, the advisor, Chet Bean with Bean Wealth Management Group. And then for our brokerage general agency, we have Chuck Anderson, who probably needs no introduction to most of you, but he's with DBS, or Diversified Brokerage Services. They are a wonderful organization that helps advisors all over the country do all sorts of planning and insurance planning in addition to variable life. Our insurance carrier is none other than Nationwide Financial, represented by Matt Reddick, and Matt is out and about. Obviously, you'll see him at the various industry events. A wonderful person, and he can help navigate some of those waters for Nationwide. So thank you all for kind of joining us today. And as I mentioned before, this is just about the variable sale, the dynamics of it, the origins of it, and the process it goes through. We're going to have some fun with this, and I will start with Chet. And Chet, I'd like you to, tell me a little bit about yourself, about the practice, and how you approach planning, and a little bit about your organization to start.
So thanks for having me today, Charles, and it's nice to meet you, Matt. Chuck, I'm excited to join y'all today. So just a little bit about myself. Of course, my name is Chet Bean. I'm a financial advisor at Bean Wealth Management Group in Waco, Texas. And I work alongside my mother, Shanna Bean, who's been in the business for over 30 years. So she came in 1987, originally worked with New England Financial, and then switched over to Woodbury, where we still are. That's our broker dealer. And I came in the business in 2019 after I graduated from Baylor University. So I'm still kind of a youngling compared to some of my peers in the financial industry. But we're a full service firm, so we do mostly asset management. And then of course, we do life insurance, disability, health. And I would say our main focus is mostly in the managed money space. Life insurance, we're trying to get that more of an integral part of our practice. And so, yeah, other than that, just kind of going through what you were talking about, Charles, on the whole planning process. So with us being a holistic, financial planning firm, we look at all aspects, whether it be estate planning, of course, planning for retirement. But then when the life insurance comes in, mostly we're dealing with small business owners and executives as our main, target base for our clients. And so, especially with the Biden administration coming out and saying that they're looking at reducing the estate tax exemption by half. That was a huge kickstart for people to start looking more so at life insurance, especially our clients that have large taxable estates, which most of them do. So that was a huge aspect, and that's kind of just a little bit about our firm.
Fantastic. So as you're reviewing clients and their needs, right? You mentioned kind of small business owners, executives, and sometimes, it's difficult to kind of broach the subject or bridge the gap, if you will, from the investment world with assets under management and then into kind of the insurance world. How do you kind of go about some of those conversations with folks? Does it come up during the portfolio reviews as far as the insurance need? Do they come to you with that need? How do you begin that conversation with a customer on the insurance piece?
Yeah, I would say it's mostly due to it being brought up in our annual reviews or semi-annual reviews with clients. So of course we're looking at their whole portfolio, and then anything that they have, outside of our firm, and then looking at, okay, so you're going to have this estate tax issue, especially when the law sunsets in 26, and we need to protect these assets somehow. It's also too with most of our clients being business owners, we're looking at assets that are creditor protected, where that's where life insurance, of course, comes in huge. And I would really say it's just constantly going over all the available options that someone has, in their toolbox, as they say, for your portfolio. So recently this year, we did a couple of pretty big overfunding cases where, of course, clients already maxed out their contributions for their retirement accounts, and they were looking to, have an option to get that tax-free income down the line, and then also leave a legacy for their children. So I think it really just kind of depends on just, constantly being in communication with the client, and, letting them know, hey, you do have these other options available, and let's go over some of them with you next time that we meet. So I think it's just really bringing it up to them. We're not really actively seeking, I would say, new business on that front, just because we're, to be honest, already at capacity with what we're doing right now. So you need to hire some more people, but it's hard these days.
I certainly understand that. That's awesome. Now, as it pertains to variable life, I know that you haven't been selling variable life for forever. You've been selling other types of products, and I think variable, from our previous discussions, kind of came up, last couple of years or so, where it's kind of entered the picture, as far as a product that you are positioning with customers when it's appropriate, right? And so what do you like about variable life in particular? Maybe it's, particular product, or the way certain attributes are there, or, I know that there are some guaranteed VUL policies, the lifetime no lapse type policies. There's various different accumulation models that really are particularly great for those folks you mentioned, where they're maxing out their retirement funds and they're looking to put some monies away in a tax favored basis. If you can talk a little bit about maybe what you like about variable life, maybe the evolution of that thought pattern as you kind of move to that as a product you offer.
Yeah, I would say the main thing that we like about it is the flexibility that variable life offers, especially nowadays with the caps on the traditional IUL products, being lowered pretty dramatically over the last few years. That kind of opened our eyes and really made us kind of search for new products, research other different variable life products instead of just going with the IUL. I think another huge thing too on the flexibility standpoint is most VUL products nowadays do have the index accounts within them. So I mean, if you look at it, if you're looking at doing it like an IUL, then you're totally limiting yourself on the possibility of adding those different variable sub accounts down the line. And then in a VUL product, you can be 75% an S&P 500 annual point-to-point index account if you want, and then have that 25% in an actual variable sub account. So I think but basically how we explain it to our clients is like, we don't want to limit them on the options that they have available to them. And so that's I would say one of the huge aspects of VUL that I think is super key. And then really this year too is a great time to get into variable product during this down bear market. I mean, get like a traditional IUL account on the S&P and it's got a 8.5% cap, and you purchase it today, chances are most likely the VUL is going to outperform it in 10 years. I mean, probably outperform it next year. And I think another big aspect about, variable life and any life insurance product for that matter is, we're looking at this as a long-term investment. This is not something that, the client's going to get in and then get out of in the next 5 or 10 years. So when you're looking, 20, 30, 40 years down the line, we look at that kind of the same as our managed money accounts. Okay, if someone doesn't need access to these funds, you know, within 30 years, why would we put them all in fixed income right off the bat, or limit ourselves on the upside? So I mean, it kind of translates to variable life where, we treat it kind of the same as managed money, where we're looking at this as a long-term investment. We are not going to be, limited on the upside. And then also too, I mean, one of the flexibility things on the downside protection, like I'm sure Matt might talk about this, but a big hit with us has been like with Nationwide's protector product. So if someone is, very concerned with the market and negative performance, hey, let's slap an enhanced no loss guarantee rider on there until age 120. So it doesn't matter what the market does, as long as you pay this stated premium that we're illustrating, you're gonna be fine. And so when someone's, I think there's a product and a rider for everyone out there to take advantage of. So I would say that that's the main thing, is flexibility.
Awesome, Chet. Yeah, those are some really great points. And I'd like to bring Chuck into the conversation. And Chuck, if you can kind of, go over a little bit about how you guys work together. You've known Chet for some time. You're a trusted resource on the insurance front. And how do you guys work together? How does that dynamic work?
Yeah, thanks, Charles. And really, I'm just getting to know Chet. I've been monitoring his business from afar, and I recommended him for this panel because I was very impressed with, and Chet, I knew you were young, but now I find out you're not even 30, I think so. And I'm just super impressed with, I got to see some of the cases you submitted to DBS. And Chet touched on this, the idea that, their firm really focuses a lot on managing assets, managing money basically for their clients. And I think, in my opinion, that an advisor like Chet, and there's many of them across the country, they have the financial planning background, they have the stronger analytical background about managing portfolios. And that really is a good mix for, it's the right skill set, I think, for helping clients be successful with variables. So my team, I actually have a field relationship manager right there in Dallas that supports Chet in Waco, Texas. And I was able to get to know Chet because of Ryan, our field relationship manager down there. And our first objective really is to make sure that we're making contact with advisors and really helping them understand how many carriers we work with, including Nationwide, one of our better carriers that's just right there with good products. And we really try to provide all the right ideas and solutions for them to deploy with their clients. It goes a lot further than the sales team. And I know Chet really relies heavily on our entire team. It kind of starts even with licensing. Whenever you get involved in a variable sale, that you definitely need to be registered, right? You need to have your life license and have it be a variable license in the state that you're operating in. So we have a team that really validates all of that. And where I think it really becomes crucial in terms of BGA support, and what I'm really proud of being part of, is that we have a case design team at DBS. Most BGAs have a case designer, or 2 or 3. We happen to have over 10. Sometimes they're called internal wholesalers, but I know that to serve the needs of advisors like Chet, you really need to be able to provide not just the illustration, but all the material that goes along with that illustration. Some of those are required documents like the prospectus, but to really provide lots of good solutions and options for them to consider. And then as that gets more refined, really help them zero in following their direction on exactly what carrier to go with and how the case should be designed. The next step is really our case management team. Variable products really are not more difficult really than a traditional product to case manage, which is good. but there's a lot of details that need to be carefully managed, and we need to be, have a sense of urgency around those, because we want to shorten that sales cycle as much as possible. One of the things that the carriers have done in the last few years is implemented automated underwriting, which has, I think, been a breakthrough for our industry. I was thinking about, certainly been doing this for a long time, and I remember wishing for the day that we could eliminate exams and labs. And it's amazing how often we're able to do that up to a certain face amount. I see a lot of variable cases coming through that do not require exams or labs. So that's been a breakthrough as well. And I think advanced sales support is the other key area that we try to be focused on. We have an advanced sales business development executive, Terry Getman, on our team. Most BGAs really offer that level of service. And if they don't, we rely heavily on the carriers. And I know Nationwide has a great advanced sales team. Most carriers do, and we get to know those people because the advisor really needs good information just in time to answer the client's questions. So I'm really glad to be on this panel. I was really glad Chet agreed to join us, because at the end of the day, we're all playing important roles, but the most important role is the actual advisor and what Chet does with his clients. So we're here to serve and do things properly, right? Make sure that our broker dealer, which happens to be the Leaders Group, is in good shape with what we're doing. So that's kind of a run through about what we do here at DBS.
Absolutely. And I like the just-in-time information, because it's crunch time and the client needs the information, the advisor needs the information. I know how that can be, and it's important to have a good partner. We can rely on each other to get that information. And we do serve as the broker dealer for DBS. We try to keep them out of trouble and make sure they're doing the right things.
Good job with that.
Chet's broker dealer is Woodbury, and also a wonderful broker dealer that he works with. And in a variable sale, of course, having a broker dealer there where they have to review to some standpoint the suitability of the sale is always kind of an interesting dynamic. Well, with that being said, I do want to bring in our carrier partner, Matt, with Nationwide. And, Nationwide has a wonderful product lineup. And maybe you can talk about from Nationwide's perspective, as you work with BGAs and agents out there all day long, what are you seeing on the variable side, and what excites you?
Yeah, thanks, Charles. Thanks for having me today. And there are a couple of things that I notice that are exciting, that are trending currently. Chet touched on the first one, was the protection focused VUL. And I've been with Nationwide 17 years now, and I've seen it go full cycle, where when I started, we didn't even offer a GUL product. And then for protection sales, GUL was the only thing anyone sold. And now it's come back to where we've got these VULs with death benefit guarantees. And in light of the sustained low interest rate environment, boy, these products have become a very attractive option for that protection focused sale. And the other I'm seeing, Chet has mentioned it, he mentioned it a little bit with the reduction in the estate tax exemption, or what we're afraid may happen. And we're seeing a lot of people trend and start to position assets as a hedge against potential rising tax rates, whether it be capital gains tax or income tax. We're seeing people start to utilize accumulation focused VULs with an eye towards that flexibility in retirement that will allow them a little more efficiency in distribution, at least tax efficiency in distribution of those assets. And then the last thing, and this is pretty new, and I know, Charles, you're involved in this, and our partners at DBS are really helping us promote this product in the field, is for those advisors that are more fee-based, we've got an advisory VUL that we are just now starting to launch and promote. And it's really built with a low fee structure, just like the rest of our products, but it's built with an eye towards that fee-based advisor in managing the assets. So those are some trends that I'm really noticing right now.
Those are great points. all great points. And that new advisory product is pretty interesting. So, listeners out there, keep an eye out for that one. Take a look at it. Might be an opportunity to look at from Nationwide. And so we have, the agent discussion, right, with the customer, bringing up that conversation during client reviews, determining what customers are right. We have the BGA that's there as the partner to help process and provide those illustrations and guidance. And we have the carrier support that have the great products, right, and everything in place there for the offering. Now, if I can take a step back to what I was talking about with broker dealers, Chet, your broker dealer is Woodbury. Can you describe a little bit of the process? And I know it's a little different with Woodbury on how you get the approval process, or how the process worked for you submitting that, and how maybe you work with DBS on doing that with the broker dealer.
Yeah, so it's actually kind of interesting because as far as variable products go, with mostly everything, we have to have pre-approval on a variable product, of course, before we can actually, go forward with the purchase. However, variable life insurance is unique at least with Woodbury, because they do not require pre-approval. It's kind of interesting because they do a post-approval process. So they're not going to, deny you from selling the product and then purchasing, the policy. However, where the compliance comes in is after the fact. They'll look at, all the bases and the facts of the situation, the product, just to make sure that it's in conjunction, of course, with their risk tolerance, overall investment goals, time horizon, and whatnot. So we've never had a post-approval that's been, rejected or something like that. So I don't, knocking on wood, I don't think that would ever happen, but it's quite unique. And really, I would say the approval process after you place the product is definitely less stringent than on other variable products that they have to approve or require pre-approval. So that's pretty interesting. And then, of course, though, when actually you're trying to figure out what kind of product to do, that is where our broker dealer does kind of limit us. So I think it was about 3 or 4 weeks ago, the first VUL product that allows term blending was approved at or under advisor groups, larger umbrella, of course, Woodbury being under that. So before then, I believe that's still the only product that has that option for term blending on a VUL that's approved currently. So we have to look at, of course, what products we can sell before we even do anything. And there are a few carriers that, at least on the VUL side, that we can't sell, like Penn Mutual, I think, is one, and there are a few others. But that's kind of where we come in from the broker dealer side and how we have to, navigate around that.
Yeah, that's, working with broker dealers can be tricky. It sounds like Woodbury has a good process in place where it makes it somewhat straightforward and easy, right? And I know, Chuck, you deal with agents that are with all sorts of different broker dealers. And how do you navigate some of those waters? I guess you probably would have to be somewhat familiar with, are you approved to work in the system? What are their processes and procedures? Those sort of things. Maybe you can lend some insight from kind of a broader view of the BGA working with different broker dealers, how that all comes into play.
Yeah, it's a great question. And really, if you think about it, the best BGAs, and NAILBA is fortunate to have it's a great organization of a lot of BGAs across the country. And we play an integral role, I feel, in the suitability process. If we're basically providing illustrations and marketing support for the advisor, it allows us to put an extra check in there. Is this sale a good sale? And fortunately, advisors like Chet, and we work with many of them, like you said, multiple broker dealers, they're always looking out for the long-term best interests of the client. And at certain ages, going into a variable contract, that you need to take into consideration time horizon that Chet just mentioned. Do they have a long enough time horizon to make the market returns make sense for their their product. And we also touched on this, that there are the number of options really in the VUL contracts today. I think either Chet or Matt mentioned this, it almost mimics the IUL contract, right? So appreciate the carriers doing such a good job of continuing to innovate and make that a good sale. But I do believe that it's our job as BGAs to really look over be a good partner to the advisor, really review the options that are available and make good recommendations. A lot of times it comes down to 2 or 3 carriers and maybe a couple variations on case design, and we work in partnership with them to make sure that the sale is the right one for the client. And as our broker dealer, Charles, I know you appreciate that we really want to make sure every sale is a good sale, and we go out of our way to provide that additional support and expertise, for advisors like Chet to work with.
Yeah, Chuck, we as a wholesale BD, have limited kind of exposure or liability, right, in the process. And we're, there to hold your registrations and make sure that you're compliant when you're helping advisors out there with sales. And so from our standpoint, I think just ensuring that you're doing exactly what you're doing, giving the right options, giving the right advice, doing the best you can. And it's really kind of those retail broker dealers that are on the suitability check and making sure that those processes and procedures are followed. And I know that sometimes kind of muddy waters to sometimes navigate. But I think that variable life, some folks think it's very complicated. Some people get a little shied away from the dynamics of broker dealers and working with registered reps. And it's something that can be done, so for any listeners out there that we're thinking about getting into the variable distribution market or selling variable life as an agent, I would rethink it and work through it, because I think it's easier perhaps than they think it is. And so it's a wonderful product group. And I think we have so many great options out there. We mentioned the flexibility, the new IUL sub-account options being in there, the great long-term strategies for customers. And so I want to kind of lead into the final kind of round of just going around the horn and touching on any last comments that anybody has just about anything they want, about the variable marketplace, about interacting with agents, broker dealers, whatever it might be. And I'll start with Matt, with Nationwide to try to give some final comments on a good panel.
Well, my last point, I will start with, I encourage anyone that is presenting a VUL, that's considering a VUL, placing a VUL for a sale, especially on the accumulation side, to really work with your BGA partners, work with your broker-dealer contact, to dig a little bit deeper than just the tabular detail on the illustration. These illustrations and the features in the products have evolved in such a manner that there's a lot more to it than illustrating a 7% gross rate of return and having that be reflected in the illustration. And so dig a little bit deeper with your distribution partners that you're working with. And that's one of the things that we try to do with our partners at DBS is they don't necessarily need our help so much on the case design side of things. They've got 10 people that are experts in that. Really, where they can benefit from our help pre-sale is, hey, what features does Nationwide offer with this particular product that will mesh well with how the advisor manages the rest of the client's portfolio, or mesh well with what the client's goals are with this particular product. So look a little bit deeper than the illustration.
That's a great point. You get the indication that spreadsheeting, just simple spreadsheeting on illustrations is a little misleading, and you got to dig a little deeper. I know also that your long-term care rider is very popular. Things along those lines, those extra pieces that you can add on for client benefit, just huge opportunities. Chuck, I'll go to you for any final comments.
Yeah, thanks, Charles. Really consistent with Matt. I mean, I wasn't that long ago that I was talking to a lot of advisors, probably like 10 years ago, and a common phrase was, well, I gave up my registration, selling a lot of variable, but I decided to let it go. And I really do encourage advisors to really take a strong look at variable. There is some steps involved in getting your registration back on. There's some compliance, continuing education and other requirements you need to fulfill, but it is well worth it. I think that there's been some breakthroughs, I believe, in the last 5 or 6 years, including things like how our variable products, many of them really can be a good GUL alternative. About 10 years ago, it seemed like everybody was selling guaranteed universal life. They wanted that lifetime guarantee. But I'm not an actuary, but I do remember and I was with a carrier, 3 carriers for about 40 years, most of that time with Prudential. And I would talk to the product design folks, and I'm sure Matt can back this up. They really feel that the variable product allows for better pricing longer term. It's easier for the carrier to handle the reserving requirements. So I really think the long-term picture is very strong for variable. And then I think it's been touched on already today, but the number of features and benefits that have been added, including the advisory VUL product that Matt just mentioned, we're just starting to leverage that in the RA market space, which is really good. But really every time an advisor makes a sale, look at what type of chronic illness LTC riders are available, because those have been added at a rapid pace. You can really satisfy some very important client needs by including a chronic illness rider or some type of benefit access rider to the policy. It just makes a huge benefit for the client for not a tremendous additional cost. And then to just really jump back in, if advisors are listening today and they haven't really wanted to resume the variable marketplace or have that part of their arsenal, I would really recommend that you reconsider. Take the steps that it takes to get registered and get acquainted with BGAs like ours and many others in the NAILBA community. You'll be amazed at the innovations that a number of the carriers have come up with. And I think it provides the most well-rounded set of solutions for clients of advisors like Chet. I really think that he's doing a good job by getting immersed early in that. And there are plenty of situations where a term policy makes the most sense, or some other fixed life insurance. But by far, the biggest advantages come when you bring in the variable product mix into your portfolio, because it just enables advisors to solve many problems and provide solutions for those problems for their clients. So I say jump in and feel free to leverage DBS or any other of the great NAILBA BGAs to help you satisfy those needs.
Thank you, Chuck. There has been such evolution in this space that it's pretty incredible. And Chuck kind of mentioned a few of the items, AG 38 on the reserve requirements for guaranteed products, AG 49 and 49A that put restrictions on IUL products that force the carriers to kind of integrate those IUL options within the VUL chassis. And then most recently, I'd be remiss if I didn't bring up, changes in 7702 that allowed some more cash value to be shoved into the policies relative to the insurance purchased. So a lot of evolution through regulation, but also the carriers have been involved in the evolution of all the product features. And I think it's great points that you brought up, Chuck. Thank you so much for participating. And Chet, Matt, and Chuck, really do appreciate your time today. And thank you all for listening to our panel, and have a great day.